You just read the headline. Earnings beat expectations. You buy the stock. And after you buy, the price drops anyway? What happened? You're not wrong about the news. You were wrong about how far your thinking went. Today, we are breaking down second order thinking, the mental habit that separates average investors from the great ones who consistently see beyond the obvious. Here's the problem. Most people think in a straight line. They see the good news, they buy the stock. They see the bad news, they sell it. That's called first order thinking. It stops at the first, most obvious conclusion. But here's the catch. If the news is obvious to you, it's obvious to everyone. And if everyone reacts the same way, that reaction is probably already priced in before you even hit the buy button. First order thinking does not lose because it's dumb, it loses because it's crowded. Second order thinking is popularized by Howard Marks in his famous book, The Most Important Thing. Let's try to understand more. First order thinking. It goes like this: the company launched a great product, the sales are growing, the news is very positive, everyone already knows about this news. So, what is the problem? The problem is that millions of other investors can see the same headlines. If everyone already expects great results, they rush to buy the stock. Stock price rises, or it may have already moved far ahead of reality. So you can be correct about the business and still lose money on the investment. Quality company does not mean great investment returns. Please stick till the end of this video where I will give you real life examples on how to apply this second order thinking. If you like this video, please like and subscribe, which will encourage me to do further videos. Imagine two investors looking at the exact same company. First order thinker might say, "This business is amazing, I'm buying it." Or he may say that due to low growth and rising cost, I'm selling it. His thinking is very simple and superficial. Whereas the second order thinker will say, everyone already thinks it's amazing, and that's why I want to sell it as it is overrated. Or he might say, the outlook of the company is bad, the stock price is already low, now is the time to buy. Here's the surprising truth. In the stock market, being right about the company is not enough. The investors who often outperform are the ones who think one level deeper. Second order thinking asks a different question based on three layers like reality, expectations, and market price. Let me give an example. Imagine two restaurants. One is a famous, expensive restaurant with great reviews and fully booked for months. You expect the food to be perfect. Whereas the other restaurant is cheap and not that famous, food is average, and reviews are not that great. You expect a worse experience. Assume that you dine in both the restaurants. To your surprise, the expensive restaurant disappoints you, and the cheaper restaurant positively surprises you. Similarly, in markets, surprises matter more than the perfection. Stock moves when the reality differs from the expectations. Let me give a market example. Let's say a tech company is growing very rapidly. Investors expect revenue to grow 50% this year. The company reports 20% growth. That is still excellent growth, but the stock falls 20% after the earnings call. Why? Because investors were not buying the present, they were buying an even more optimistic future. Consider another manufacturing company. Investors expect revenue to grow 2% this year to no growth at all. The company reports 5% growth after the earnings call. The stock rises. Why? Because the reality exceeded the expectations. The stock returns somewhere lies in between the reality and the expectations. How great investors think. Great investors spend less time reacting to the headlines and more time analyzing the expectations. They ask questions like, what does everyone think will happen? Are expectations too optimistic or too pessimistic? What is actually happening in the business? What do I think will happen? What is the probability that I will be right? What will be the result if I am wrong in my assumption? What happens if the crowd is wrong and I am right in my assumption? To summarize, second order thinking is to find the knock on effects. What happens after the obvious reaction? So, the next time you hear, this is a great company, pause for a second and ask, is the company great or is the market simply expecting too much? Because in investing, the biggest opportunities are often found not where the crowd is looking, but where the crowd's expectations are wrong. Before your next trade, try asking three questions. Number one, what is the first obvious decision here? Number two, is that decision already priced in? Number three, what happens next once everyone's already acted on that decision? That one extra question is the habit. Practice it enough and it stops being extra. It becomes how you think by default. If you like to have this cheat sheet, please feel free to download it from the comment section. Let me end with a real life market example. Before SpaceX went public in June 2026, the excitement was enormous. The IPO valued the company at 1.77 trillion, instantly making it one of the biggest IPO in the history. A first order thinker might have said, this is an incredible company. Everyone wants it. Let's buy immediately as part of the IPO. But a second order thinker asks a different question. What happens after the IPO? Will employees sell once the lockup period ends? Will early investors and private equity funds take profits? Could a wave of new shares hit the market and push the prices down? Of course, a few weeks later in August 2026, selling pressure did increase and the stock fell sharply. I'm not saying SpaceX is a bad company. The lesson is that great companies can still become vulnerable when expectations are extreme. Always ask, then what? Good investors study companies. Great investors study expectations based on their second order thinking. If you like what you saw, please like and subscribe this channel, and thanks for watching.